Okay, so we're gonna go through bare bones, basic beginner stuff like together right now, just so you can get like an understanding of the charts and stuff. You know what I mean? All right. So when you're looking at the charts, yeah, the charts, there's two. You know, like in mathematics, like a graph. You have the x-axis over here, x-axis, and then you have y-axis over here. Oh, hold on. Let me just draw this out properly. Okay, you have x over here. Actually, you know what? I'll take this tool. Much cleaner. Okay, you have the x-axis over here. Make it thick and bold so you can see. Okay, x-axis, which represents time. So bottom, center, time, right? And you have the y-axis over here, which represents price. Exactly. Okay. Time, price. So when you read the charts, you read from left to right. Okay. And the way we read the charts, we read them through these candlesticks. Okay. So every candlestick has four points of data. Okay. It has an open, it has a low, it has a high, and it has a close. That's for the bullish candle. Open, low, high, close, that's bullish. And then for the bearish, you have the open, high, low, low, close. Yeah, exactly. Okay. And I'm gonna move all this down here. Oops. Okay, so let's draw this out visually so we can see how it looks like, right? So when we have a bullish candle, I have it drawn on my charts as green. You can have it any color you want, but I personally like green. Sometimes I put gray. You know, it doesn't really matter as long as you know yourself what it is, right? So, okay, make this thick like that. Okay, there we go. And then every candle has, this is like when a candle opens, right? It opens like this. There's the opening price. This is the open, right? Then price moves down. It makes the low. And then when it comes back up and flips this, right? It leaves behind a little tail. Right? Exactly, yeah. So then when price keeps moving up, it creates the bullish candle, right? So you know that the body here, that's where the majority of the volume is of like the price movement. This is just showing you that it went down and then it flipped the open, right? So then it continues up, it continues up. Let's say price moves up, it makes a high, right? And then it starts pushing back down. Well, the maximum price that it went up to, it'll create another little tail up. And that's the close. Over here. I'll move it back here. So this was the low. This was the high. And this is the close, right? So that creates the bullish candle, right? Now, same idea for the bearish candle. Okay, so you have the open of the price of the candlestick, open. Now it starts moving up. It creates the high. And then once it starts pushing back down, it creates the tail, right? And then once it flips this open price level from where it opened in time, now it changes colors and it becomes bearish, right? A bearish candle. So it moves down, boom. Exactly, yes. Yeah, so it pushes down, right? And then we get into an area, it's close to the close, it moves up again, it creates the another tail at the bottom here, which is the low, and then we have the close here, right? So open, high, then we have the low, and then we have the close over here. Okay, so this is the basic anatomy of how the candlesticks, like why they have different colors, what they are, the different characteristics. This is a bullish candle, we have the open, the close is above the open. That's what the characteristic is of a bullish candle. And for bearish, the price closes below the open, right? So I'm going to move this aside, move this down, right? So now let's go look at the charts. Like, this is real charts, okay? So I'm going to go on the daily. So every candlestick, right, it's 24 hours, yeah. So every candlestick opens at 1800, right? And then it closes at it should be 17, yes, 17 exactly, because there's 1 hour gap for futures, right? So then there's like 1 hour gap, and then the next day same thing, opens up, and that's a new candle, right? So then it's like a new daily candle, new daily candle, new daily candle. So every day we look at the price action between 1800 and 1700, right? And that creates a new candle every single day. Yeah, so now opening price over here, can you tell me at what time it opened here on this bullish candle? Mm-hmm. We're looking for the open at what time? Yeah, 1800. Yeah, exactly. It opened at 1800. Yes. So we opened price at 1800. Okay. So what time did this close over here at the top?
17.
Okay, perfect. Yeah, it closed at 17, right? Perfect. So can you like, so this tail over here, we'll start with this one over here. So this tail over here, what does it represent?
What was lowest price at that day?
Yes. Yes, exactly. In terms of the y-axis. Yeah. And then what does this represent up here?
There will be a high price.
Mm-hmm. Yeah, exactly. So what about this one over here? This candle over here. This black one, big black one over here. What is this? For this black one, it's a close. This line over here, what does this represent?
That was actually the price
This line over here, this horizontal line. If this is a bearish candle, right? That, yes. Exactly. So this is the open, exactly. And what time does this open? 1800. Perfect, bro. Perfect. So that means that if this is the open, so what is this? Close 1700. Perfect. Okay. So what about this point up here? What is this? Highest price of the day. Yep, exactly. And what about this one over here? Okay, perfect. Yep, exactly. Lowest point of the day, highest point of the day. So that's these are the four data points, right, of a candlestick, right? So can you help me out really quick? Can you repeat to me what the 4 points are of a candlestick? Yep. Close, high, and low. Okay, so I need 2 categories for these. I need to organize these in order to know what, yeah. So bullish would be open, low, high, close. Yeah, perfect. And then what about bearish? Bearish should be open, high, oops, open, high, low, close. Perfect, exactly. So now you have an understanding of like the data points, what it represents, right? So this is, we're going with the daily candle because it's easier to just frame it, right? Yeah, so but every candlestick, doesn't matter what time I'm in, like 4 hour or 1 hour, right? If I go to the 4 hour, it means that every candle is 4 hours. Yeah, if I go to the 1 hour, it means every candle is 1 hour. Yeah, so we can see, like, for example, this candle, it was at 11 a.m. Eastern time. 11 a.m. Eastern time, 12. Yeah, exactly. 12 noon, next one, exactly. So this. Mm-hmm. Yes, exactly. So you see how they're side by side over here? It means that this one closed and then this one opened. So you see, because this is close and then next candle it's open. And then it continues. But it's divided in the times. You understand? So all the information of 4 hours, or for this, in this case, in 1 hour, all the information of 1 hour is represented in one candle over here. Yeah. So if I wanna divide this candle in 4, I can go to the 15 minutes, look at 11 o'clock, 11 to 12, like this, and so that hourly candle is now divided into 4 candles. In 15 minutes. Yeah, exactly. And each 15 minutes shows the open, high, low, close, open, high, low, close, open, high, low, close. You know what I mean? Until we get to 12. Then at 12, we close, and then we open for the next hour. So it would be from 12 to 13. Same thing. Open, high, low, close, open, high, low, close, until the next. And that would be hour by hour. Makes sense, yeah? Not too complicated right now? Okay, perfect. So now, where's my drawings? Did I remove all my drawings? Oh, it was daily. Yeah, exactly. Perfect. Okay. Open, high, low, close. Okay, so now I'm gonna explain to you the the characteristics of what's happening, the logic behind the candles. Yeah. So if we have the bullish candle here, I'm gonna take this, I'm gonna copy it. Oops. I'm gonna copy it like this. So now I have my bullish candle, and then this one I'll make my bearish candle. I'll remove these for now. I don't really need these. Okay. Okay. I'm gonna take this line. Actually, I don't need this. Okay, yeah. So one more thing before we move into this. So on the x-axis over here, in the time axis, right? So this that you see over here, if I represent this whole axis over here as, oops, if I represent this all as one day, daily, right? So this is one day. Every day we open up 1800 here, right? 1800, and then we have three sessions in the day. Okay, we have Asia, we have London, yep, and then we have New York. Okay, and then in the charts, these three sessions are separate sessions. So let's make a little box next to each other. Okay, so every session, same structure every day. It has the same, Asia has the same open every day, same close of the session. London has the same open, same close, and then New York has the same open and the same close, right? Okay, the charts that we look at, always Eastern time. Yeah, so at the bottom over here, you can put New York time, because we follow the volume of New York. Yeah, so when we look at this now, every session has its own specific characteristics of what happens in that session. Okay, it's not 100% by the book, but roughly that's what happens. Okay, when you look at the charts, you want to keep in mind, okay, this is Asia, we should see this. This is London, we should see this. This is New York, we should see this. And then from there, you can analyze the charts and be like, okay, this is the characteristics of London. This is what I'm expecting. This is the characteristics of New York. This is what I'm expecting, right? So Asia session, just really quick. I'll show you in a live chart over here, so you can have a better idea. I'm gonna take today, for example. Yeah, you see? So now you have the open over here, and then you have the close over here, right? So now what we can see, I'm gonna draw this like this, and I'm gonna make it more visible. Open, put it to the right, cool. And now what we can do is we can take this, we can show our candlestick next to it, right? So let's follow along with price, and we can see how the daily candle printed, right? So we open up price over here. So first we move up, right? So the candle, it's gonna look green, right? Because that's my bullish color. So it goes up, right? And then it starts pushing back down. It's still green, right? Still green. starts pushing down. You see how I'm moving my cursor and it's following? Okay. So now okay, we're back at the open, and now we're gonna change the color because now we're moving below the open price. Now it's gonna look like this, right? But now, since we're down here and price made a high here, this is the current high that it made, right? So the candle looks like this, right? So now as we push down, we keep moving up, we keep following this. It's gonna leave a low here because we just came down and we just made a low. So now you see how it's printing slowly. It's creating it, and slowly as we go, right, comes up. This is supposed to be green because it's above the open. So as we go, we start making movements, and still this is how it's gonna look in real markets, right? So it goes up. Okay, now we made a new high here for Asia, right? We push down, right? Yeah, they move, exactly. They move, new high, and now it comes down like this, right? And still it looks like this. Yeah, and you see the data points here as live, printing live as it goes, right? So you get the idea, right? So as we go, so if I go faster, we go like this, we start going down. It's not gonna go this fast, but like London goes up, New York prints up, and then we push down, and now we made a new high for the day. Exactly. This flipped the open, right? Come back up, makes it green again, pretend it's green because it's like annoying going back and forth. So now we go down, boom, push down. We made a low here. Now we push back up, but now this is gonna leave a little tail down here. Push back up like that. It's gonna look like this. Push down, and then finally we close the day. And this is the daily candle now. For the whole day, exactly. Perfect. So now I can talk about, okay, this is the time frame. 2000 is the open of Asia, and then over here midnight is the close of the session, right? So this is Asia. I make my Asia box like baby blue. It doesn't really matter, you can make it whatever color.
So you are actually making these boxes.
Yeah, I make them manually.
Okay, got it.
Yeah, these boxes are made manually, yeah. But this is like a standard time because yeah, exactly. But it's better for you to understand the tool before you use it, you know what I mean? Yeah. So you're not lost with it. It's you have to know the tools you use, you know? So this is London, right? So London opens at 2 a.m. Eastern, and then it closes at 5 Eastern. Okay. And New York, I don't usually put New York. I don't put the boxes for New York. Exactly. Yeah. I'm in the live charts. I don't need it to remind. I just need this because I work off of what happened before, and then I use New York based off of the data that I have here and here.
Did you just have a gap between Asia and London?
Yeah, it's just a gap. Like, yeah, it's just a gap. Yeah. But yeah, exactly. There's a 2-hour gap. But this could still act along with the Asian narrative, or it could act like with the London narrative. It doesn't really matter. This is just like rough estimate of the characteristics that you want to see, right? Okay. So New York, the bell for New York rings at 9:30. This is when the volume comes in. So you see the difference here? Hold on, give me 2 seconds. I have a call on my phone. Give me 2 seconds. All right, I'm back. I'm sorry about that. You guys there?
Yeah, I'm clear. Did you hear me?
Yeah, I just got back. My bad. Took a little break, I guess. Had to take our call. Okay, so where were we? Yeah, okay, so 9:30 opens up. This is where all the volume comes in for New York, right? This is everyone who trades the markets, they wait for New York because this is like this is when the move happens, right? So this is where the most amount of money like is poured into the markets. So the characteristic for Asia, right? It's consolidation. So most of the time for Asia, this isn't set in stone, but most of the time for Asia, what you're going to see is some kind of movement. Some kind of movement, consolidating, building up orders, right? Building up orders for liquidity. Then for London, characteristic, you're going to see it's going to make some kind of manipulation move, high or low of the day, right? About 70% of the time. Like roughly, let's say roughly 60 to 70% of the time, it makes, London will make the high or low of the day. Okay. And that would be manipulation, right? Okay. So I'm gonna put consolidation here. Manipulation. And then for New York's characteristic will be either a manipulation, right? Or, well, actually, you know what? I'm gonna keep it simple. It's gonna be the distribution phase. Yeah, distribution phase, right? So this is the phase. What did you say? Yeah, the working zone. Yeah, the distribution. So this is where it distributes. Price will distribute to where it has to go, right? So you see, for like today, for example, we had the manipulation, and then the distribution downside. So we took the liquidity. We built up liquidity up here. Liquidity, right? Liquidity built up. Liquidity built up. So liquidity, it means there's money on the table, right? And then London comes, New York comes, we manipulate the high, take all the liquidity, right? Take all the money on the table, and then we distribute to the downside, right? So distribution phase is the phase for New York, right? So these three characteristics, consolidation, manipulation, distribution, is called power of three. Okay, so this is the power of three because there's three specific phases in the markets that happen every day, right? So if we go back in time, what would be good? I'm gonna put like 50 back. And you know what? I'm gonna also put, for the days, I'm gonna put a vertical line. Opening price? No, I don't want opening. Daily separators. Okay, cool. So we should see now it's separated out every day, right? So we have, in this case, we have, actually, what else should I put? I should put a vertical line on New York, just in case. We'll put 9:31 like that. So can we see it? Nope. No, I'm gonna put just enough for us to see like a little vertical line here, just to separate it out. Okay, so it's over here, you see? So this is just representing the start of New York. But New York, I'm looking at it like continuously, right? So Asia, London, New York happened here. Okay? This day, this was the phase of how the daily candle like printed out, right? So we'll look at this day. Same thing over here. We have Asia, London, and then New York distributed down and then came back up, right? Now we have this day over here. We have Asia, London made the low of the day, right? And then New York had the distribution back up, continuation. So this is optimal day, this day over here. Good day to trade. Characteristics are following. Everything's looking good, right? This day, a little bit harder, but all this, it's kind of foggy to see on this time frame, because normally you would have the context of what's happening on the higher time frames too. You would have the higher time frames, and you can see where the liquidity is. Okay, where are we aiming to go? Okay, so that basically is foundation of like what we look for every day. So do you have any questions for now? Like, is everything clear? Everything's clear? Yeah? Okay, cool. This. Okay. Cool. So let me just take this off. Boom. I'm gonna take all the drawings off. Okay. So, rough schematic. Rough idea, right? So can you tell me what phase of price this is? Asia, yeah. And so what's the characteristic of Asia? Yeah. So what is that called? Yeah. And it's accumulating, yeah? Yeah. So this is accumulation phase. So this is A. Accumulation. So what is this right here? Yeah, London. Manipulation phase, yeah. Manipulation, right? So why is it called the manipulation? Because yeah, it's manipulating the price to take the money that's on the table. Yeah, and then yep, it's manipulating price to take the accumulated money on the table. So they hold price in a range, right? The market makers, they move price in a range. They accumulate orders up and down here. So then they manipulate the price. They take all the money, and then what's the last phase of the market, of the candlestick? Distribution, yes. So now after taking the money, right? After taking the money that's on the table, now they're holding money, yes? And all the way up, they're making profit, right? Towards their destination, which is, I don't know, it could be a level of liquidity here, or it could be like an order block, right? Or it could be a fair value gap. It doesn't matter. It's just there's a target, towards the target. Right? So then we close, and that's what makes up a candlestick, with the characteristics, with the different phases of the candle, right? So the power of 3. So we just went over like a lot of information Yeah. Do you understand everything?
Yeah, you guys did it. I love it.
Yeah. It's good. It's good. It's good. Okay, good. So it's simple, yeah. It's pretty simple.
I mean, I just love it.
Yeah. It's good. It's good. That's the best time to learn when you feel like a kid. It's all new. Yeah. So this is like this is how price moves, right? Like every day we have accumulation, we have manipulation, we have distributions. It's not perfect, right? It's not perfect, but what we're trying to wait for, we're trying to filter, right? We filter on the days that are perfect, and we take the opportunities that are laid out. Like today was a good opportunity. We had the, like, normally London is supposed to have the manipulation, but we didn't have the manipulation in London. We still continue to consolidate. So over here we had like consolidation, manipulation, distribution. Yeah. So yeah, because if you look over here, okay, so this is going to be the next like part of the lesson. Like this is going to be a new, in terms of like what direction it's going to move, and like more nuanced understanding. So you want to keep going?
Yeah. I mean, could go a little bit more if you
More?
okay.
Okay, cool. All right. So now we just went over open, high, low, close. We went over sessions of the day, x-axis, y-axis, time, price, accumulation, manipulation, distribution, power of three. Okay. Okay. Now what we're gonna do is we're gonna look at. We're gonna reference back to the previous lessons that you had, right? So previous lessons, you remember?
That's something maybe we can just go over.
Yeah, it's okay. We'll go step by step. Okay, so price has three phases that it can move in, right? So same idea like before, right? Price can either move sideways, like this. Price can move up, or price can move down, right? So if price is moving to the side, it means it's just moving side like this, and it's just bouncing around, right? If price is moving up, it means it's trending, going up. Higher highs, higher lows, higher highs, higher lows. Yeah? And then if price is moving down, same thing, but in reverse. We're going downside, yeah. Lower lows, higher lows. Lower lows, higher lows, lower lows, higher lows. So this is a consolidation, right? Consolidating market. Consolidating market. This is both of these. Okay, so this is consolidating market, and both of these are trending markets. Trending. One is trending bullish, right? And then this one is trending bearish. Yeah, exactly. So now we're gonna go a little bit deeper. Okay, this is gonna be deeper. So now you see how when we're creating these trends, upside and downside, we're creating price moves by creating ranges, right? So we move like this. So we make a range. We make a low and a high point, yeah? And then we come down, right? And then we continue up. We make a low and a high point. And then we continue back down, right? And then we go up, low, high point, so on and so forth, right? Same thing for the downside, right? Come down, make a high, low point, come back inside the range, and then go outside, right? So we make a high and a low point, and then that's the range, and then price goes inside the range, right? Oops. Price goes inside the range that was created, and then we push external to the range, yeah? High, low. So that's bearish. This is bullish, yes? Okay. Now, this is rough schematics. This is like perfect. It's too like perfect, right? But roughly an idea would be like, you can see how, if I'm looking at the charts here, you could tell me like where this is going, yeah? This is a bullish trending market. Yeah. As opposed to something like this, which is sideways, consolidating. Yeah? Yeah, exactly. This little, yeah, going bearish here, trending. If we go zoom more in from like a 1 minute perspective here, we can see that it's I forgot where I was. Yeah, over here. Yeah, so we can see that it's like trending down. So you see, right? So it's making the range, we come back inside the range, right? And then we push external, then back internal, and then external. Yeah. So a range, when we make a range, I'll take this example, real market price. So we have a range like this. So you see the 50% point? Okay. So think of this like prices in the store when you're trying to sell a car or you're trying to sell anything, right? So this under here, under the 50%, this is considered discount. Yeah? And above the 50% here, this is considered premium. Right? So if we're trying to sell something, you obviously want to sell it at a higher price, yeah? Okay, so once it reaches premium over here, you can expect price to look for people to sell to. So price then is gonna come down. Yeah. That's what makes a bearish trend. People are selling in premium. Yeah. %, premium. This is where you would look for sells. You know what I mean? Because you're in the upper half of this range. If this is the full range, you're in the upper half of it. This is where you would look for sells. Make sense? Okay. Same idea here. Come up, right? And then let's look at a bullish one. We make a range, yeah? So what is this range, this bottom half called? Discount, yeah. So this is a discount range, right? And what is this upper half called? Premium. Premium. So if we're buying something, do we want to buy at premium? Discount, yeah. It makes sense, yeah. You want to buy low prices. You don't want to buy high prices. You're gonna get fucked if you buy high prices. Only stupid people buy high prices. Smart people buy low prices. So you wait for price to go down, cheap. you buy it, right? And then it continues back up. Yep. Exactly. Now it's expensive, yeah? Now all the stupid people, they want to buy here now. All the dumb people, they're buying because they see, oh, it's going up, it's green, it's going up. But the smart people, we sell here because now we push back down and we buy discount and we sell premium. And then we buy discount and we sell premium. Make sense? But people that don't understand, they chase the candles, right? They run. They don't stand still. They don't think. They just chase after like a dog chasing cars. They don't think. A dog doesn't think. It just chases. Here, we sit back. We analyze. We look for the range. And we look for where the discount is for buying, and then we look for where the premium is for selling. This is basic fundamentals, because it gets deeper later, you know what I mean? It gets a little bit more complicated, it gets deeper, but still the same fundamental basics. Any questions? It's good? Got it? So is it helpful? Everything's good?
Yeah, okay. I mean, I was gonna go over
Mm-hmm. 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 So the reason why we make these ranges, right, is because price needs a reference point. Like, how do we know if it's cheap or if it's yeah, we need a reference point, because like, in what reference are we implying that it's cheap? Like, it could be cheap for who? It's for this range or for this range. Depends on what you're isolating, you know? Okay, so you see how when price is moving, let me think about what next step to make so that you can understand better. Yeah.
So let's say now you're gonna make sure there won't be the from your perspective watching like this, won't be a reference that you're watching it for, like will be day, how many of the time frame you would consider today?
Oh, well, I'll explain that later. Yeah. It's a good question, because obviously, like, but it's a bit more complicated, because, but I'll explain everything. So let me think about how, like, what the next. Okay, yeah, this is good. Okay, so you see how we have like a range, yeah. So how do we know when the range stops and when the range starts? Well, like, how do we know? Like, you wouldn't know, right? Like, you would have to wait for specific signatures. Okay.
Then you're watching for patterns, yeah?
Yeah. But specifically, like, let's say, okay, price is pushing up, right? How do I know when it's flipping? Like, how do I know when it's time to come back down? You know what I mean? Well, I'll show you. Okay. So price, when it creates these trends, right, and it has these ranges, every point over here, for example, we have a specific signature that we look for. Okay, it's a swing point like this. Okay, so it's 3 candles that look like that. Okay, so we have a swing point here, right? Oops. Swing point like this, and then over here at this low, we have a swing point over here like this, and then at this low, we have a swing point like this. Okay, so every time price starts to push up, it creates these swing points. Yeah, exactly. It creates these 3 candle swing points. So on the flip side, same thing on the flip side. On the top over here, what do you think we have over here when it starts to push down? Also swing points, yes. So just for the sake of, I'll just draw one, you know. So we'll have like this candle. So we have 3 candlesticks here, right? So we have a swing point here, then we have a swing point here, right? Now price pushes down, now we have a swing point here. Oops. Now we have a swing point here at the top, right? So now we make a new range. So I'll show you the range. So we have a range here, right? From this, let me change the colors. Go purple, so you can see. So we have this over here. This is a range, right? And now from this isolated range, we push inside. Now we have this low, right? Now we move up, boom, and we create a new range because now we have this new low here and we have this new high here. Make sense? And now we have a new range over here. And now price comes back down inside, and then it makes a swing and it's ready to go from bearish to bullish. Yeah? So that's what the swing point is. It goes from bearish over here, has a swing point, and then it goes bullish. Yeah? So let me just show you another representation. So we have price goes bearish, right? We form a candle, a candle like this. I'm just showing you the bottom part, you know? Now we have like this, one lower than this, so we sweep this, right? This candle 2 sweeps this, and now we have candle 3 continues up like that. Yeah. So what we have here is we have candle 1, making the accumulation. Now we have candle 2 making the manipulation. So we have the accumulation, we have the manipulation, and now candle 3 we have the distribution. Yeah, exactly. So candle 3 distribution, we want to see big bodies created, because now we're moving from selling, now we're displacing up after coming down, right? So now we're changing the directions. Yeah. Now we have a change in the state of the delivery. Yes. At first we were in this state of delivery. We were in the sell state of the delivery, and then we had a change of state of delivery, and we continued up now because now we have a new state of delivery. Make sense? Okay. So now this, let's look at a real chart, right? So we'll look at a daily time frame because it's easier to look at swing points. Wow, look at this beautiful piece of art. I'll just like clean everything up. Okay, so this is nice over here. So when you look at the charts now, is it more clear? More clear, yeah? You can it's not very chaotic anymore. You can kind of see the order in it. Yes, you see that there's structure, there's order. It makes sense. There's reasoning behind things. It's not so like vague, right? Before it used to look more vague. Yeah, it was. Yeah. Before it was just black and green. Now you see more meaning behind the candles. Yeah, there's a story behind it now. Yeah, exactly. So now can you show me? I'm gonna move my mouse around. Okay. Like you see this red dot. Okay, so I'm gonna move my mouse around, and I want you to show me like a swing point. Okay, so I'm gonna go at a random piece of price. Okay, let's go somewhere around here. Okay, so let's start from here. Perfect. Yeah. So can you show me the accumulation candle here? This one, yeah. Okay. So, yeah, exactly. It manipulated down, yeah. So we swept this low. Yeah. So you see how we opened here. We push down, and then we come up, and then we close. Yeah. So that means if this is a daily candle, if we think in our minds, okay, how did the day look like more spread out, right? So we would have to open like this, open. We would have to push down like that, and then push back up like that, right? So that means that inside this wick, we also have, a swing point. Because we push down, we have a change of the delivery, and then we push up. Because for us to draw this candle, first we had to create the body down, and then we have to push back up and create the body up. Yeah? Yeah. Makes sense, right? Yeah, so from when we opened over here, we come down, and then at the tippy top over here, we have another swing point, and then we push back up, right? And we create the curve. We create the curve, yeah? So we create the sell side of the curve over here, and then we create the buy side of the curve over here, yeah? Because over here, the cells, there's an order flow, yeah? It's like water. There's like a flow, and the flow is pushing down, just like the trends we were looking at, just like the bearish trends. There's a flow, and it's pushing down. The flow is pushing down. And then all of a sudden, over here, there's a specific point in time, we hit some kind of change in the state of delivery. We hit some kind of change in the state of delivery that makes us shift to go bullish, yes? And now the flow is now changing to the buy side. Now the flow is all respecting buy delivery. Makes sense, yeah? Okay, perfect. So now, if we have this candle 1 that swept, and candle 2, now look at candle 3. Look at the distribution. You see the distribution? It's distributing up, yeah? So we have candle 1 here. 1. We have candle 2 here. 2. We have candle 3 here. 3. Yeah? So this is a swing point. So you remember how I was saying, like, there's candle 1, and then candle 2 is the manipulation, and now candle 3 is the distribution. Yeah. So you see how the distribution candle, we don't even wait, we just keep going. Yeah. This is like a perfect swing point. This is like ideal swing point. You see this in the markets. On the day you see, exactly. So check this out, my friend. If we go like this, start new, and I hide this, right? And then you look at the day. This is a daily candle. You look at the day, you're like, okay, wow, what's happening here? Yesterday we swept it. Now what can I expect to happen tomorrow? What can I expect to happen tomorrow? Characteristically, I have the swing starting to form, yeah? So I can anticipate candle 3, candle 1, candle 2, and then I can anticipate candle 3 to push up. Yeah? So next day, boom, we push up. So let's have a closer look at this day. What happened this day? Right? So let's move down to the 4 hour. Boom, 4 hour. Oops. Candle 3. Move this, right? So we have 1800. So I'll do this 1800 and then 1800 and then 1800. Okay, so now we have candle 1. Now we have over here candle 2. Yeah. Now we have over here candle 3. Okay. You see that? You see how we flipped, and what does it look like over here? Uh-huh. And what do you see with these 3 candles here? Another swing. Yeah. So this is another swing because we're looking at this day now. Oops, hold on, let me bear with me. Sometimes this is annoying to draw. So I'll do this. I'll highlight this, okay? So this is the candle 3. This is the day that we're like anticipating for it to go up, right? But even on this day, on the manipulation day down, we have another swing here. Yeah? Candle 1, candle 2, candle 3. So we have an overarching swing like this. Oops. Like this. And now we have a little swing here. And now if we can more confirmation, but it's just showing you that this candle on this day, we're creating a swing inside a swing. So we have a big swing and then we have a little swing here. So every day on the 4 hour, every day you're gonna find a swing. You see this swing here? This is 2 a.m., this is 6 a.m., this is 10 a.m., right? This is 2 p.m. That makes sense, yeah? Okay, so candle 1, candle 2, candle 3, yeah? So what do you notice over here on candle 2 on this day? Does this look familiar? Does this look familiar to you from the previous lessons? These 2 black candles, and then we have this candle touching it and then continuing. Does this look familiar? You can say no if it doesn't. If it doesn't look familiar? Do you remember order blocks? Ah, okay. So we'll go over order blocks. But this, you see, this is an order block because you see this green candle, we moved up, we closed above this, yeah? See how we closed up here? We have these 2 candles, and then this green candle moved up and we closed above these 2 candles. So now it makes it like a step, you know, like a stairs. They're like stairs. Now it's using this to step up and continue up. Make sense? So if this is the 4 hour here, right? 4 hour. Now can you think about, like, if you zoom that, if you concentrate that 4 hour, yeah? If you concentrate that 4 hour and divide it out into 1 hour, yeah? So this is that order block over here. I'm gonna make it blue. This is blue. I'm gonna put 4 hour order block so we can remember that this is the 4 hour order block, yes? So at this 4 hour order block, okay, what do you see here? What do you see these 3 candles? What does that look like? You see these 3 candles? Swing, yes. So you remember what we learned about the swing? We see the candle 1, candle 2 manipulation, candle 3 distribution, yeah? But this is on the hourly. So we can see every hour starting to distribute. Yes? Make sense? Yep. So we're continuing the trend. See? Continuing the trend. We have a swing here too. Continuing up. Yeah? Makes sense? So start paying attention to these 3 candles. See how there's 3 candles? Yeah, swings. Start paying attention to the swings because those are the start and the finish. So they're the start and the finish of trends. And that's what we're trying to capitalize on. We're trying to capitalize on trends. We don't want consolidation. We don't want sideways. We don't want this. When price goes like this, we don't want this. Yeah, we want this. We want this. We want this. We want movement. We want movement. Because then we can capitalize on ranges, yeah? On a bigger y-axis. Yeah, more y-axis, more money in our pockets. Expansion, more movement. Not all the time. Not all the time. Not always. A lot of people get that, but that's a good observation. That's a good question. Very good question. Because a lot of people they might think like, oh, we have a big manipulation. That means we're gonna have a big distribution. Not always the case. Not always the case. Sometimes we can have a very small. Look at this. Like this is a small manipulation, right? Like it's just pushed down a little bit. And look at the distribution. Big distribution. This is every hour. Yeah. So, yep. Look at this manipulation and then big distribution. Very small manipulation, but but what's important is that look at this. We made the swing here, right? Right before we push down. 1, 2, 3. Yeah? So we have candle 1, candle 2, candle 3. Yes? Yeah, bearish. And then so what does that mean? That means we flipped here. Yeah? We were going from bullish. Yeah, we're going from bullish. We made a peak. We flipped. Now we're going bearish. Yeah? Makes sense. Yep, same thing here. We go like this. Boom, swing point. So that means we're going bullish here. And then exhausting swing point, we flipped, pushing back down. So when you look at this piece of price action over here, right? You can see the trends here, even on the 1 hour. You can see how we're starting to make swings, we're starting to push up. Yeah? Make swings, push up. Okay. So Dado, if you can see this already, you're on your way, bro. You're on your way to the money. It's yeah. It's like this is all. It's like it's literature, bro. This is literature. You're reading the candlesticks. You're reading this. You know, it's like a book, right? When you read a book, there's a bunch of words, yeah. But when you're reading the words, it makes sense. There's a meaning behind it. Same thing here. It's a bunch of candlesticks, but when you're reading the candlesticks, right, it has a meaning behind it. And the more you understand what the swing points and what it's telling you, the easier it is to read it. Especially with the characteristics for the day, right? So with the open, high, low, close, accumulation, manipulation, distribution, and now with the swing point ideas that you have, it's a very good foundation to build from. Yeah? Perfect, huh? If you have any questions, let me know. You're good? Yeah. It's good, right? Yeah. Look, you know what? Like this is gonna be your homework, Dado. Okay? Like today's Friday. Okay, you're very lucky. Maybe not so lucky because you're eager, but when the markets open, you can start by just going on like a daily time frame. You look at the daily candle, yeah. Just look at daily candle every day. Every day, just look at how it printed the previous day and how do you think it's gonna print the next day. Just every day. So tomorrow, I mean, next Monday or whatever. Like, hold on, let me go to recent price action. I'm in the replay. Like tomorrow, I mean, Sunday open, Monday. You're gonna look at the candle like before, right? We close here. Now I want you to see what happens the next day, how it prints. Yeah. Don't even predict. Don't even predict. Just watch it. Just look at it. No predictions yet. Yeah, no prediction. But what do you notice here, by the way? What do you notice on this? Okay, my friend. Okay. So you see this way, okay? Do you see the range? Yeah. Yeah, you see the range? The premium and the discount. Yeah. This one, yeah? And then what do you see here? Yeah. So what do you think is gonna happen? This is too expensive right now. We're gonna come back down to something more discount. We need cheaper prices. Okay, so this is what I want to see. I want to see it come down here. Yeah, makes sense. Yeah, we just made a swing. We just made a swing here. Yeah. Yeah. But I want exactly. Yeah. Good observation. Yeah. But I want to see this continue to push down more because now we made a swing here. We made a swing here. Okay. So now think about this, right? Now we have a range. We have a range. Now I want to see it go inside the range, right? And then once we have the swing created inside the range, right? I want to see the target get hit. Where's going to be my target? External range, right? Because there's liquidity here. There's money here. There's money here. So when we come down cheap, all the dumb people, right? They're selling at the lows because they see black candles, they sell. They get scared, they sell. We buy. We're smart. We buy. Right? So we start buying. Because once we buy and price goes up here, right? We're in the profit. And their accounts are blown. Yep. Mm-hmm. Yeah. Mm-hmm. Mm-hmm. Yep. Perfect, bro. You're like a professional already. You should teach me. Okay. Yeah. And then it's like the Russian dolls. You know the Russian dolls? Well, it becomes like a Russian doll because it's going to be a candlestick here, and then we come down, and there's going to be swing points of that daily. All right, so let me go a little jump in your understanding. So you see these big candles next that I just put. So I'm gonna take off this one. Right. So this is the daily here that I have. See the daily? I'm gonna remove this previous one too. I'm gonna only put one, not to confuse you. So we have the open of the day 1800 here. We have this high. You see this high? What do you see at this high here? Yeah, that's good too. Yeah, we have liquidity. And then what else do you see here? Swing, yeah. So at the highest point of the day, we created a swing on the 4-hour time frame. Yeah. So if you see this, oops, if you see, go down 2, and then if you, oh man, okay, wrong select bar, showing you too much. Okay, see this? Okay, so if you see this right in your charts, we just swept this liquidity here, right? More bearish, yeah? That's what you would anticipate. Next candle, what do you want to see happen here? You want to see open, high, low, close, yeah? Want to see open? Oops, I'll take this one. You want? I'll take this one. You want to see open? Oh man. You want to see open. You want to see high. You want to see low, and then you want to see close. Yeah, that's what you want to see for the candle, because you're bearish. You're not bullish. You're bearish. You want to see more low prices. So if you want to see more low prices, and this is how the candles, the characteristic of the candle, right? It goes, it opens, it makes a high, it makes a low, and close, right? And that's what makes a bearish candle. So what you want to see is you want to see the wick, right? So what you want to anticipate is you want to see the open like this. You want to see a wick be, yeah, exactly. You want to see a wick be created, and then you want to see the body pushed down. Yeah, exactly, right? So, and that would make the candle 3, because the highest point of the swing is C2. It's always C2. C2 is always the highest point, and C1 is always swept by C2. Make sense? Okay. So if C2 is always the highest point and C1 gets swept by C2, C3 is going to be the distribution. It's just gonna make a wick, and it's going to continue the direction, because if we divide this in half, yeah, these 3 candles, if we divide it in half, on the left side over here, it's yes, it's like triangle, yeah. So on this side is going up, because it's from the left side, it's going up because we're buying, sweeping, and then from the right side it's going down. So obviously the third candle, we want to see the continuation of this in order to create that swing. Yeah, exactly. Makes sense, yeah? Perfect. So next candle, what happens? We open, make a wick, right? Push down, right? So if we isolate this candle here, so this is a 4-hour time frame. So every candle here is 4 hours, yeah? So this is 10 a.m. over here, yes? So that means that if we break down, yeah? If we break down this 4-hour into 1 hour, we have 4 1-hour, yes? So that means we have 10 to 11, that's one of the candles, right? And then we have 11 to 12, that's the second candle, right? And then we have 12 to 13, right? That's the third candle. And then 13 to 14, yeah? That's the fourth candle. And then 1400, I mean, you know, you get what I mean when I say 14. Okay, perfect, military time. So 14. So these 4 hourly candles creates 1 4-hour candle. Yeah. So every day there's 1, 2. Let me count from here, because not all the candles are printed. So every day we have 1, 2, 3, 4, 5, 6, and then over here would be the close, and we have that gap over here of the hourly, right? So it would be 1, 2, 3, 4, 5, 6. Every day we have 6 4-hour candles. Yeah. Yeah, yeah, exactly. So if we look, 1800, 1800, 1800, six candle, six candle, six candle, six candle. Yep, yep. And what do you see every day happening? See this? Swing. Okay. This day, this was the open, so we just opened with a gap. So we'll skip this one. Here we just continuation of this swing. See? This day was 1800 over here. We opened this day over here. We have a swing here. So what time is this swing? This is 2 a.m., this is 6 a.m., and this is 10 a.m. here. And look at this. Look at the 10 a.m. what happens. Look at the order block here. See the order block? See how we touched it and we just keep going? Yep. So same idea as before. What do you think is happening over here at this tippy point of the wick when it touches the order block? Oh, okay. I don't believe you. I don't believe you, dude. I don't believe you. Okay, let's check it. So let's check. Okay, so if I go down, boom, boom, swing here, this tapped into it, and it didn't even have enough time to make a swing. It just tapped into it, it kept going because it was too much distribution. If we come down on the 15, boom, what do we have? Swing, swing, continue up. So what's happening here? The order flow is respecting order blocks. You see the order blocks? The black candles? We're on a bullish trend, yeah? Yeah, we're bullish. So okay, so I'm gonna take a break. I'm gonna take a timeout now because now it's gonna be too overwhelming for you. Yeah. But right now you have a really like you learned a lot in a very short amount of time. You learned a lot, but a lot more, yeah. Okay, good. Because we just went over a lot. It might not look like a lot, but now like take the time to open the charts, to click around, look around. You know what I mean? And let it over the weekend, or whenever the next time we speak, let it digest in your mind. You know, like it's like when. Oh yeah, bro. Anytime at your pace, let it digest, give it time, you know, let it get into your mind and let it like meditate on it. Yeah. I got you, bro. You're gonna be making millions soon. I'm telling you. Just keep step by step, you know, step by step. It's all learning. But this is the foundation, bro. Don't even think about the money. Like, who cares about the money? Think about the candles. That's what makes sense. Yeah, the writing, exactly. This is literature. This is poetry, bro. This is, you know what I mean? Good, bro. So let me know if you have any questions. No problem, man. Let me know if you have any questions, man. Anytime. Yeah, a few hours, a few days. Up to you, bro. Anytime, bro. No problem, my friend. Yeah. I know, huh? But now it's a lot better. In the beginning, it's hard because it's a lot of information. You know, it's new, but now but you're a fast learner, bro. You're a fast learner. You learn quick, bro. You learn quick. You're good. You're good, bro. You're good, bro. You got this, man. I got you, man.
We'll keep in touch.
100%, bro.